analysis, and we're joined now by Stan. Joining us from IG in Melbourne. Stan, yeah, what do you think? We saw the bank shares hitting record highs yesterday. What are we going to expect from ANZ after this number?
Morning, Brady. Absolutely, it seems like a very, very positive result. Of course, yesterday we did see a lot of these bank shares start to rally in anticipation of another round of strong performance by the big banks. ANZ certainly seems to have set the tone. Its full-year cash profit up 11% at 6.5 billion, and net income also up 11% at 6.3 billion, and that's a big beat, particularly on the cash profit front, where analysts were in the $6.4 billion range. That dividend of 91 cents was right at the top end of analyst estimates. The range was between 82 to 93 cents, so of course that should really appease investors. And of course they did come out as well and said they expect to maintain that strong payout ratio, and of course as long as they maintain that strong payout ratio more towards that top range of where they're expecting it, then that should be enough to appease investors and continue to see some strong investment in ANZ shares. Yesterday they hit a fresh all-time high, and we do expect them to potentially post another record high today as well. If you actually look at the commentary as well, we've got some strong cost control structure at the moment. They've really knuckled down on costs, and they expect their cost-to-income ratio of about 43% to be maintained going forward, and potentially even improve on that. So it looks like it's a very strong result overall. There are a couple of things to look out for in the commentary, potentially the weakness in emerging markets, and of course how this impacts their Asia growth strategy, which some analysts feel, whilst it's a very good strategic move, it might not be as profitable going forward. But at the moment it doesn't seem to have deterred ANZ from a strong result. So today should be a very good day for the banks overall. Anticipation or optimism ahead of the other reports will certainly ramp up, and there'll be a lot of pressure on the other banks to deliver as well. Of course, we've got NAB on Thursday, and with the volume was really going through in hefty sums yesterday as well, just due to that investment in the banks. So we should see this continue hopefully today, and we wouldn't really encourage selling out of the banks until reporting season is over, when potentially some profit taking might start to come on board. But for now, it's really a trade you don't want to be caught on the wrong end of at the moment. So we're very happy with ANZ's result. Just looking at other sectors in the market today, we're looking at a fairly flat open, right around that 54.39 mark. Of course, apart from the banks, we also have the miners, which are looking like they might be in for a mildly weaker open. BHP's ADR is actually pointing down 0.5%. Iron ore was down to 131.80, so that might be a little bit of a concern. There are a couple of AGMs. I think we've got Stockland out, and as well we've got some quarterly output reports due out today. I think Oil Search is one of them. So there's a little bit to look out for outside of the banks, but I think most focus will remain firmly on these banks today.
Yeah, absolutely. And just on what you were saying there, that criticism, the JP Morgan, that final report criticising the ANZ Asian expansion strategy, ANZ reporting revenue sourced from the Asia Pacific region represent 21% of total group revenue, and that economic conditions across the Asia Pacific region remain more robust by comparison to much of the rest of the world. Still, conditions for banking were once again challenging. Of course, we're getting the briefing. The ANZ media briefing will be at 1 p.m. Australian Eastern Daylight Savings Time, and we'll have a live one-on-one interview with CEO Mike Smith as well at around 2 o'clock Eastern Daylight Savings Time. So we look forward to hearing that, and as you said, plenty to ask him about there, Stan. Just turning to the moves in the currency space, the Aussie dollar in focus ahead of the speech by Glenn Stevens. That's just over an hour away now. Can we expect much, though, given that there's not going to be any Q&A, it's just opening remarks at the City Investment Conference?
Yeah, absolutely. I think this was pinned as one of the two key events for the Australian dollar this week, with the second being the China manufacturing PMI later in the week. But I think this event's losing a lot of weight. Just it's an Australian-New Zealand investment conference. Not much is expected. There's no Q&A session at the end of it. So potentially it won't have too much of an impact on the Australian dollar at the moment. We still feel there's going to be a bit of a consolidation period around that 96 level until we get potentially more volatility on the US dollar side of things when the Fed hits the wires on Thursday. But for now, it does seem like it won't be enough to really provide a catalyst to see a big move in this Aussie dollar. I think it will be almost the same as the last event, where it turned out to be a bit of a history lesson and a non-event for the Aussie dollar. So potentially we'll just continue to see consolidation in the Aussie dollar today with a fairly tight range. Potentially the dollar yen might give a bit of a move. We're seeing a little bit of pricing to the upside with anticipation that perhaps the BOJ will come out with further stimulus on Thursday. So maybe the yen crosses might provide a bit more moves today, but certainly from an Aussie to the US dollar perspective, it doesn't seem like we're in for anything too alarming from Glenn Stevens' speech at 9:30.
Okay, and just given, I guess, we've got the FOMC this week, we've got the China data due at the end of the week as well. What's your thinking on the outlook for the Aussie this week?
Yeah, perhaps with the China data due out later in the week, if we continue to see some strong signs of improvement, that should be enough to underpin the Aussie dollar in the short term. But that really depends on how the FOMC meeting goes and what sort of direction the US dollar takes from it. That's probably going to drive the rest of the FX market, and exactly the moves that we can expect just depend on the timing of tapering and whether or not expectations will continue to be pushed into sort of March to April next year or not. I think that's where the market's now looking more towards now, as opposed to by the end of the year, which is what the Fed had initially flagged. But if there are signs that there is still potential for this to happen by the end of this year, then of course the US dollar might see some buying after a prolonged period of weakness, and this will in turn weigh on the Aussie dollar.
Stan, always great to get your thoughts. Thank you so much for that.
Cheers, Brady.
Stan Shamu there from IG in Melbourne. So tipping a flat open on our market there after the ASX 200 breached that key technical level yesterday. Coming up on First Business, we're going to find out why public sector productivity is lagging the private sector. Details next.
Property markets are just as scientific as share markets. Instead of buying shares in a company,